This is Eric Mwatha with Mwatha.com. This is a technical analysis for the stock market going into the week of February the 27th. Let's take a look at what the S&P 500 was doing in the last full trading week of February. We see that the S&P 500 was very close to a 52-week intraday high, very close right there. Hasn't done so. We'll see where the market is going to be trading in the next couple of days, but it's trading very close to the former weekly closing high of 1363.61. So 1363.61 is where the market needs to close to stage a weekly breakout as far as the S&P 500 is concerned. Now the Dow and the Nasdaq have already done so. The Nasdaq has done so. The Dow has yet to. Let me see whether I have that right. As far as the Dow is concerned, we see that, let me show you the Dow first. We see that the Dow on a monthly chart is actually, so the Dow has actually broken out on a daily and daily, weekly and monthly chart. This is a monthly chart for the Dow, and you see that as long as the Dow remains above 12,810, it is staging a very powerful monthly breakout going back all the way to early 2008. So this is almost a 3-year high. That being the case, you want to stay positive in this market until until this breakout fails. But the monthly is very strong on the Dow. If you take a look at the Nasdaq, ever since we had this gap up breakout here, we've probably been, what can be argued as being straight up. We've been moving straight up over the last couple of days, over the last 2 weeks, and you see even here the market making another fresh 52-week intraday high. So the Nasdaq continues to steam ahead. You see that we have the 50-day moving average crossing over the 200-day moving average, also crossing above the 150-day moving average. So the momentum has been to the upside. Now at some point the market might correct, and the logical target might be to this upward trending 50-day moving average, so somewhere around here. Should a pullback, the market might find natural support here. Right now we don't see that pullback in the market. It's very hard to pick the high. The high is going to come when it does, so we don't know when. Maybe this market is going to be moving higher for a considerable number for a while. So we don't want to rush and try and pick the high because it's very difficult. Now let's take a look at the Dow Transports. This is probably one of the areas in the market where I see some cracking in the momentum to the upside momentum. We had this upward trending wedge which broke down about a week and a half ago, and the Dow Transports keep pushing higher. Keep pushing lower, now trading around the 50-day moving average. Let's see where they hold, but this is, I would say, the first major sector of the market that's showing some signs of exhaustion to the upside. And also if you take a look at the Dow Transports RSI, you'll notice that it breaking down as far as the support on the RSI. It broke down about a week and a half. Also you'll notice that the MACDs seem to have broken the trend, seem to have broken this trend here, and also that trend there. So there's risk to the downside here in the marketplace. So keep an eye on those things. The Dow Transports, one of the first major sector in the market showing some kind of pullback potential. This is the Dow Transports from weekly chart, and you see that we are now trading slightly below the 10-week moving average, which is would be concerning if you're a bull. It either needs to hold this trend line here, or maybe it keeps pushing lower, which is going to pull the market to the downside. Right now it's at support, or it's an area where you'd say support is going to come, but right now sitting on that line, whether it's we don't know that it's going to hold or not. But as far as the MACDs are concerned, we see that MACDs have already crossed over to the downside. You got a break of this trend on the MACD and could be pushing below zero at any time. If the MACDs push below zero, that's going to suggest a market pullback is imminent. Now another sector that seems to predict where the market is going to go is the airline index, and we see after this nice breakout here, we had a run up straight up, and now we seem to have forming really the inverse of that, is a significant sell-off to mirror the rally to the upside. So here's another market showing signs of weakness. This area was a former break point, and we see that we've came and touched heads there, and now again pushing lower. So that is another area in the market showing signs of exhaustion. You'll see that also the airline index broke this trend here. Upon breaking that trend, that's suggesting further downside or at least consolidation. And we also see that the MACD broke an upward trend here. So again, the airline index on a daily chart seems like it's showing signs of exhaustion and could be leading the market to the downside over time. This is the airline index on a weekly chart, and what we see here is, if you take the lows of take the lows of 09, draw a straight line. Once we broke down here, this has been an area, this breakdown point here has now turned into upside resistance. We talked about that last couple of weeks, and we seem to be straight down after failing to move above that. That could be an area of concern if you're a bull. Also would like to see whether this area is this sector is gonna find support on its 10-week moving average, which is where it's trading at right now. If it fails, then we might see downside pressure. If you take a look at the RSI, you see that the RSI hit a critical level, which is this level here, hit that level and pull back. So that could be a classical sell point there. And we see that the MACD has also turned around here. So there's if you're looking for weaknesses in this market, it's starting to show its head in the airline sector, and also again the subsector on this airline sector, and also on the transportation part of the market. If you take a look at the Dow Jones REIT index, you'll see that unlike the other parts of the market, we started off this what was the crash of 2008. The break point became here. Once we broke down here, we had the crash of 2008, and you see we failed to move above this level on several occasions, here, and now here. So that's also a sign of exhaustion here as far as the Dow Jones REIT index is concerned. All that means is that we need to be cautious and really watch what the market is doing here, just in case we walk into a sell-off. Now here's a semiconductor index, the SOX. If you take a look at the chart, based on if you take a look at this line which connects the lows of 08, lows of a sum of 2010, once you draw that line, you come up to this area here, which is interesting because this is a former breakpoint when the market was in a sell-off mode, and we can't seem to be move above this level here on the. So this line seems to be telegraphing resistance and breakpoints in the market, and we see that the SOX is right there at a resistance point. Again, something just to watch, because when if the market is going to turn around, it's going to start showing signs like those. If we take a look at the semiconductor index, again, you see that this red line here connecting the important lows, and in this market, you'll find that again we're on the underside of this line here, forming what seems like a double top on the weekly RSI for the SOX. So again, something to keep in the, just something to watch for. If you take a look at the banking index, the BKX, we see that over the last 2-3 weeks we've been banging heads with this line that connects highs going back to 08. So we are right there, seem to be hitting that level. We'll see whether we break out or not. Also, if you take a look at the RSI for the BKX, you'll notice that we seem to be forming what looks to me like a double top here on the RSI. That might be a reason for a pullback, and we'll see how that's gonna reflect in the market in the coming weeks. If you take a look at the BKX, now the BTK, the biotech index, again you see a critical break point, which was this break point here, and this has now turned into a resistance level here. So something to watch for. It also happens to be an area where, if I could share this with you, if you take a look at the BTK, follow the red line which connects the lows of 08, and connect the lows of summer 2010. You see that once we broke down here, that corresponds with this massive break here in price. So we've worked our way back, hit that level, and seem to be coiling down. That could be a classic sell signal. So that what that suggests is that this biotech space might have seen short-term highs for now. Now, all that said, as long as the Nasdaq keeps moving higher and higher, and this is now 1, 2, 3, 4, 5, 6 back to back to back to back to back to back positive weekly closes ever since we had this breakout. Ever since we had this breakout here, you cannot ignore this kind of a move. So which suggests to me that the longevity of this rally, even with pullbacks, is very telling, because I think what this is demonstrating is the ability for this market in the coming months to move higher, even with pullbacks. Again, if you take a look at this from a different perspective, which is the perspective of monthly, going back about 13 years, this monthly chart, this is a beautiful looking breakout. This breakout after you had this nice multi-year consolidation here, right there, and just to blast out, and we're having a follow-through of this breakout. That's a very powerful breakout. What that suggests again is, you really have to be open to this market pushing higher, higher than we would think possible. So even though we might have pullbacks, don't throw away the bull market idea until down the road when it's very evident. Take a look at the UUP, the dollar ETF. Again, we see that this week seems to be a break of what was forming like a support line. We seem to be breaking below that line there. Also seem to be breaking support on the 33-week moving average. So this move to the lower by the dollar moving lower could be just one step as the dollar continues to move lower. This seems like a break to me here, but we'll see how things shape out. If you take a look at the FXE, which is a Euro ETF, seems to me like we have this nice breakout here after this what could be argued, I'm not sure, that we have a head, we have a shoulder there, and a head. So this could be an inverse head and shoulder pattern, which might suggest a move to the upside, probably bringing it to this resistance level here. So short term, I think the euro moves higher, the dollar pulls back based on what we see right now. Also, if you take a look at the RSI, you see that the daily RSI is showing a breakout above these top lines here. There's a breakout right there, which is positive for the euro and negative for the dollar. Now, if you take a look at GLD, which tracks gold, you'll see that as far as price is concerned, we seem to be breaking out of this range here. So maybe GLD is predicting that the gold index is going to be attempting to break out again after it had this pullback here. So this breakout here, the fact that the 10-week moving average, 33-week moving average are all pointing to the upside, also seems to indicate upside momentum. If you take a look at the GLD from a weekly or from a monthly chart, the GLD is very close to breaking out above 177.72, as it's now trading at about 172, 173. It won't take much to see this thing break out on a monthly chart. That's going to be another powerful breakout as far as gold is concerned, and gold could be back to all-time highs again if this breakout takes place. We see that the USO, or the crude oil space, is breaking out of this consolidation pattern here, breaking out of that consolidation pattern over the last couple of weeks, if not months, going back to late 2011. So this breakout and a follow through this week's very good. Whether it's going to move high or not is really hard to tell, but that's a nice breakout. So short term, the momentum is still to the upside. We see that on a weekly chart, the USO is also showing that the RSI seems to have been breaking out of this, what was resistance here. The RSI is breaking out. That's again reason why we see this strong move. If you take a look at the USO from a monthly chart, you see that the monthly chart is suggesting we are breaking out above this line here, RSI line. We are breaking out right there. Might suggest that this move is going to be to the upside for a while, for the next couple of months, unless it reverses sharply, like it did here. There was a sharp reversal last April. So if it reverses here again, that's going to be the same formation. Maybe we go lower, but if it keeps creeping higher, that's going to suggest a market that really wants to push and push way above the crude oil price of about 105, 106. If you take a look at the Brazilian market, again, you can't argue the fact that we have a crossing over of the 10-week moving average and the 33-week moving average, which basically suggests that pressure is to the upside. Any pullback was still going to find natural support at the 10-week moving average. What I was wanting to share with you is that I see that the Brazilian market on a weekly chart is forming what seems like a double top on the RSI. Right there, double top on the RSI. That could be a problem. The last time we had a double top on the RSI was in October, and as we remember, in October that also happened to be the high. So that double top could be that double top was a high in October 2010, and we saw the Brazilian market move lower, and it could be a high right now with a double top, and we could see this market also pull back. Let's move on here. If you take a look at the Hong Kong market, you see that again, the fact that we have the crossing over of the 10-week moving average and the 33-week moving average, that's bullish. We'll see how that's gonna go. If we take a look also at the FTSE, the London market, you see the same scenario, crossing over of the 10-week moving average and the 33-week moving average, very bullish, which suggests that any pullback is probably initially going to be shallow and a bounce very likely. The KOSPI, same scenario. We see this crossing over between the 33-week moving average and the 10-week moving average. And then also we see that the Japanese market had a nice week, nice rally that brought it to this price channel top lines. Right there is where it's trading at. So that could be a short-term high. We'll see how things go. One more here, we are looking at the Indian market. Again, we see the early signs of a crossover between the 10-week moving average and the 33-week moving average. Net, even though the market, if you take a look at the Indian market, if you take a look at where it's finding resistance on the upside, you'll notice that this was a break point here. This break point here was a break point of this wedge. So we broke down here, and this is an area again where we are finding it difficult to move above. So this could be early signs of a pullback as far as the Indian market is concerned. And also if you take a look at the RSI, you'll also notice that the RSI initially is where it got into trouble before the pullback here on the weekly chart, and again we seem to be stalling right there. So this could be an area where the market turns around and has a pullback. How much of a pullback we're gonna get, who knows. As long as the markets are trading above the 10-week moving average, the momentum is going to remain to the upside. This is Eric Mwathe with Mwathe.com. Peace and blessings.